What's up everybody? Welcome to the Stocks channel. Today I want to do weekly chart technical analysis because we didn't do it over the weekend, and it's very important to understand the weekly chart structure. So first up, let's take a look at a weekly chart of the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. So first things first, SPY is clearly breaking out here at a brand new all-time high. And it's important to note that I did my 2024 price targets from the weekly chart, and I told you there was a good chance it was going to be a bull market year. But I also do think it's going to be a very volatile bull market. The reason that is because you can see very early in the year here, we are pushing out to new all-time highs, and I did give you the price targets here, and we're very close to the first one at 488. And then above 488, things can get really interesting because if we continue to push higher, we could push all the way into the 500s. Now, when you're getting a breakout to an all-time high, that is a bullish indication that the market is trying to go higher, but it doesn't guarantee that the market needs to go higher in a straight line. There's always going to be ups and downs and plenty of volatility. So with this being an election year, expect plenty of volatility, especially as we get deeper into the politics of the year. But as we are breaking out, you can clearly see we have higher highs and higher lows on the weekly chart, and we are bullish as long as we're above the breakouts at 457 and the breakout at 475. So 475 is your first weekly risk level because as long as we're above that, there's no reason to get bearish. And then if we break below 475, we're likely coming down here towards 457. So those are the critical support levels I would pay attention to. And then of course we have the price targets each and every day on the daily analysis and these price targets right here on the weekly analysis. So do your best to block out the noise. This is clearly a bull trend and we have no idea when it's going to top out. Eventually we will reach a top and go through some kind of pullback or correction. But it's a lot simpler to watch the price action on the daily chart and manage risk around a critical support zone than it is to try to call for a top and try to short a bull trend. So do not bother trying to short a bull trend. Just stay with the trend as long as we have it because there's no telling how high it's going to go. Now the next thing I want to look at is a weekly chart of the E-mini futures because the S&P 500 E-mini contract has not yet made a brand new all-time high, and there is good reason to believe that it will. So if you look at the last update, I drew an arrow here because we were getting a breakout retest from the high back here in July. And when you get a breakout retest in a bull trend, there's a good chance the trend is just going to retest that breakout and resume, and that's exactly what it did. So as you can tell from the E-mini contract, we still have about 2% upside until we get to the previous all-time high, and there's a good chance we're going to break out to a brand new all-time high. So that will obviously push the S&P 500 SPY ETF higher as well, which is another good reason to believe the market has not yet reached a peak. On the NASDAQ 100 Triple Q's weekly chart, we can see that we also are pushing higher to a brand new all-time high as long as we're above 404. And above 404, I had all of these price targets, and if we break through those, we could get that blow off top scenario into the 450s. Now, while we're above 404, there's no point guessing where this is going to top out at because we could just continue to climb because we have such a powerful bull trend. Now, if we break down below 404, then there's reason to get a lot more risk off, especially from the weekly chart. And that could take us back down here towards this breakout zone in the low 380s. But as I continue to tell you, there's nothing on the chart that tells you need to be bearish or you need to be shorting or you need to be worried about a top. We'll see it on the daily chart when we start breaking down. And we do daily chart analysis each and every day, so we have plenty of time to react if we start to roll over and die. And then quickly, let's look at the NQ contract, which is the E-minis for the NASDAQ 100. And just like the ES, we had a retest breakout, and now we're pushing to the previous all-time high on NQ. So if we break out to a new all-time high on NQ, that is going to help juice the ES as well, and that is going to push us into a short squeeze territory where anybody shorting these contracts is going to cover on a breakout. That could easily push this arrow to brand new all-time highs, and I do believe that's what's coming. So there's good reason to believe the market is still going to go higher, especially this month in January. So don't get overly bearish just because, yes, we are at resistance, but markets and bull markets break through resistance and turn them into support. On the Dow Jones weekly chart, you can see that we did hit that price target at 381 and we are starting to pull back. But if we blast through 381, that means we're going all the way higher towards 390. And we're staying bullish in the Dow Jones as long as we're above this breakout in the 360s. Now, obviously, there's closer risk levels for the short-term swing traders, but we cover those on the daily chart, and these are the weekly charts. And on the weekly chart, there's nothing that says we need to get bearish as long as we're above 363 in the Dow Jones. And then probably the most interesting of all is going to be the Russell 2000 chart this year, because on the weekly chart in the Russell, you can see we are nowhere near all-time highs, and we just bounced off of a rising 200 weekly moving average. So that bounce off of 188 was very critical, because I believe any secular bull market needs to stay above a rising 200 weekly moving average, and the Russell 2000 has been chopping above and below a rising 200 weekly moving average, so we're looking for a break out of this range in consolidation and starting back into a trend. I do believe that is going to be a bull trend, and I do believe the small caps are going to be playing catch up this year, which means there's lots of opportunity in the small caps if you have been missing a lot of the rally in the other indices. So very simply said, stay bullish above 188. We do have a weekly gap that could fill at 193. And the next bull breakout is going to be when we start getting weekly closes above 200. Above 200, we easily start pushing into the 220s, and then above the 220s, we go into the 240s, and then above that, we have a brand new all-time high in the small caps. So I do suggest staying bullish in IWM as long as we're above this rising 200 weekly moving average, and that is a very well-defined risk level. And then lastly, let's look at ARKK, because it's also very correlated to the small caps, and if we start to break above this neckline at 50 and we can hold above this rising weekly 20 period moving average, it is also possible we are going to see a bull run in the ARKK ETF that could push us as high as 67. So don't rule out these small cap stocks just yet, especially if the rate hike campaign is starting to end. It could be a very bullish environment for these small cap names. So just a very quick recap, let's look back at the S&P 500, and we could see we had bull trends and all-time highs in all of the indices except for the small caps, and I do believe this will be the year they start to shine. Obviously, we have risk levels to manage from. If we're wrong about any of these predictions, we can easily manage our risk from these levels. And I just want to remind you, with these weekly bull trends, you do not want to get bearish just because. A market breaking out to a brand new all-time high can start to run, and there's no telling where the top is going to be. Even though there's always going to be people trying to guess and trying to predict when the top will be, those people are very often wrong, and it's very hard to short a bull market, so I suggest not even bothering. It is much easier to short a market that is in a downtrend, and this market is still in a very strong uptrend. Now, obviously, that doesn't mean we won't get pullbacks along the way. We will get pullbacks, but it's very difficult to time them, and usually you're much better off buying the dip than trying to short and hope that you make money during the pullbacks. So get a very solid trade plan, get your discipline and patience down right now, and there's a lot of trading ahead for the rest of the year, and I think we are going to absolutely crush it this year. If you want to come crush the market with us, consider joining Bank Trade Alerts, where you get all of your buy and sell alerts directly via email and text message. And it's very simple to follow because we only trade two ETFs, the TQQQ and the SQQQ. You can find out how to join Bank by clicking on the link below. If you want access to all of my intraday updates and technical analysis, then you need to be in the Stocks Channel Discord server, and you can find out how to join that below as well. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.